Okay, let's get started. All right, so very warm welcome to everyone, and thanks for joining our Market Watch episode 4. So as I've mentioned earlier on, this is done on a weekly basis. So every Sunday, I will actually share with you what is the short-term market direction for next week, as well as some of the opportunities that I see in the market right now. So as much as possible, I try to look for opportunities, but again, there's no guarantee. But this time round, today, I'm quite happy to be able to spot a few. Okay, but very important, again, do your own due diligence. Whatever I share with you today is purely for education purpose, and it's very important for you to check out the company and of course to do some further reading, right? With all of you. So this is going to be the key sharing for today. First of all, I'm going to start off with the short-term market direction, because I think very important. For the past few weeks, you realize that I've been sharing the market is a little bit sideways. And for those of you who were inside our community, so last week the sharing is done inside the community, I mentioned that there could be some downside pressure, especially on the Nasdaq, and you can see over the last few days, Nasdaq has taken quite a fair bit of a correction as well as a pullback. And the good thing is it's starting to recover. So Thursday and Friday, the market was pretty bullish. In fact, Friday everything was up. So where is the market heading? Later I'm going to share with you. And then at the same time, I'm going to share with you how I search for stock opportunities. So that's going to be the short learning lesson for today. And last but not least, I'm going to go to the stock opportunities. And last but not least is the Q&A. So if you're excited for today's sharing, can you just type in excited? Excited. Wow, I'm excited because we have 100 participants with us today. And if I never remember wrongly, this software should only support 100 participants. All right, so anything more, I don't know whether they can join or not. Like a look, right? Okay, anyway, that slide wasn't supposed to be there. Okay, so let's start off with the first one. Let's look at the S&P 500. Okay, by now you should have already known what is the S&P 500. This is basically indexes to represent the US market as a whole. So previously I did mention that the market is actually going up quite a fair bit. So at any point of time there could be a correction. So in fact, over the last 1 week, we actually saw quite a drastic drop. Okay, I would say a drastic drop because you can see that the drop is the gradient is quite steep. Right, and the good thing is, as mentioned previously, that based on historical trend, at least for the past 1 to 2 years, every time the stock reaches the EMA 50, okay, which is the orange line, you can see that it is actually a well supported. So it started to bounce up, and it started to bounce up, and this actually happened again a couple of days ago. So it touches the orange line, and then you can see over the next 2 days it starts to bounce up. So if nothing goes wrong, this should continue to go higher, and then it could go a little bit sideways. Okay, but of course, if the market is really strong, it will just go all the way up. All right, so this is the S&P 500, and then let's move on to the Dow Jones. Okay, very similar. Okay, but except Dow Jones is only represented by 30 companies, but we can see pretty similar thing happening between the S&P 500 and the Dow Jones. So it has came down, okay, and then for the last 2 days, the green candle was also pretty strong. So I do expect that the price should continue to head up, or at least go in this particular zone. I don't expect it to actually go down even further, at least for the short term. Right, and very exciting for those of you who are invested into the tech sector. Right, so this is the Nasdaq. So you can see this is actually an uptrend trend line. Okay, an uptrend trend line. So if you just connect all the dips, all the valleys together, you can actually see that this is actually a strong support area based on the uptrend support zone. And once again, there's actually good news coming from there. You can see that it was supported, and Friday there was a good green candle. All right, so if nothing goes wrong, it should continue to go up in this particular direction. So at least for the next 1 week, I do expect all the market to be pretty bullish. Okay, so that is my personal take. So as you can see, based on short-term analysis, short-term TA, we can see that next week should be a pretty bullish week. So with so much bullishness in the market, so what about the stock market? All right, so this is actually an old opportunity that I mentioned earlier on. Again, I just wanted to give a quick update. All right, so I mentioned about Walmart. In fact, it has dropped a little bit, but it has recovered. So I am still holding it. Okay, so whatever I share with you quite a number of them, I do buy them myself as well. All right, because again, whatever I share with you is what I will go in. So this is something that I'm in. All right, for those in our community, I posted inside the Facebook. I mentioned that I'm in as well. So I'm still holding it. Okay, it is still within the zone. It has not go beyond my cut loss area. Another one is Barrick Gold. Okay, again, this one, I think it is right now somewhere around in the middle lah. Okay, in the middle. Okay, it's still pretty flat lah. Okay. Yeah, I'm still holding this as well. Okay, I'm still holding this as well. So this is something that I entered about less than a week ago. Right. So last Friday. Sorry. Last week lah. Last week I entered. So Barrick and Walmart. I just want to give a quick update. I'm still holding these two. All right. So yeah, Jackson is in. Yeah, but your gold is in the red, but your Walmart is 11% gain. Okay, that's great. But anyway, just continue to hold it. I'm still holding it. The game plan still remains the same lah. Nothing has changed. All right. So before I go to the opportunities, okay, I wanted to share with you something else. Okay, this is what I wanted to share with you. Okay, where to look for stocks? So for those of you who have been listening to our Telegram, who have joined our Telegram for quite a fair bit of time, you will know that we previously shared this thing called Fundamental Investing 3.0. In fact, I have episode 1, episode 2, and episode 3. So based on this particular checklist, okay, earnings, when we look at a company, okay, there are, in short, 4 criteria that we want to look at. First of all, the company must be profitable, okay, positive and growing. The cash flow, operating cash flow must be positive. ROE got to be more than 15%, and debt must be less than 0.5. So with these 4 criteria, okay, in mind, what are some of the shortcuts that we can actually do to help us to look for opportunity? That is where I wanted to share with you this thing called FinViz. Okay, can everybody type in FINVIZ, FinViz? So this is the thing that I wanted to share with you today. Okay, I hope you can see the full screen. Okay, but anyway, all right. If you can't see the full screen, just let me know. What you need to do when you come to FinViz is you want to go to this place called Screener. Okay, Screener. And once you're in the Screener, you can click on Fundamental. Okay, fundamental, and that is where we want to key in the 4 criteria that I've mentioned earlier on. So first of all, we want to make sure that the company is growing, right? So what we can do is you can actually see over here EPS growth. Okay, you can use the past 5 years lah. So as long as the past 5 years growth is positive, okay, pretty much it tell you that it should be growing, right? So that's the first criteria. The second criteria is the free cash flow. All right. So do we have any free cash flow? Okay, unfortunately, you don't get any free cash flow here. So later on, you have to do your own check. The next one is ROE, more than 15%. Can you see over here? So this is the criteria that I want. And every time I put in a criteria, the number of stocks actually reduce. Okay, the number of stocks actually reduce. Last but not least, debt to equity, less than 0.5. So can you see when I actually put in more criteria, the total number of companies actually drop, right? So this is the 3 criteria that I have. EPS growth is positive, ROE above 15%, debt to equity under 0.5. If you want, you can be even more bullish. So for example, instead of positive, you can actually put, let's say, above 10%. That means you're looking for companies that is growing at least 10% over the last 5 years, right? So the stricter you are, the lesser the company will appear, right? Because, yeah, the criteria is even more strict. So what you can do over here is that you can see 292 companies. That's still quite a fair bit of companies. So there's a shortcut that I wanted to share with you. And that is to, rank them according to their market cap. So all you need to do is just click on market cap. If you click once, it will rank from the smallest to the largest. So is this something that we want? Probably some of you will say that, oh yes, a small company is good because it has a more multiplier effect. All this stock is like how much? $2 become $20. Yeah, happy man. All right. But the problem is a lot of all these companies, we probably are not too familiar with it. So it might be a little bit difficult, especially if you're new. So what I would suggest is to start on the larger cap first. All right, go for companies that are relatively larger and relatively stable with a good track record, right? So when you click this twice, you realize that you have companies like Alphabet, Facebook, Berkshire, Alibaba, TSM, Nvidia, PayPal, ASML, Adobe, Accenture, Intel, etc. So many companies, and I'm sure you are familiar with all these companies. If you are familiar with all these companies, can you type in familiar? Familiar. Familiar. In case you're wondering, wow, how to type familiar, how to spell familiar. Okay, yeah. So you can actually go to page 2 as well. So you can see that there's actually many page lah. And even if I go to page 2, this company are all pretty, I would say they are not totally new, like AMD, okay, Activision, for those of you who love to play game. And of course, we have, what else? Monster Beverage and Lululemon, right? So these are all companies that we are pretty much familiar. We have seen their brands somewhere. So what you need to do, okay, let's say we go to, okay, Lululemon. Okay, Lululemon. So this is just a criteria. This is just to save you some time to help you to look for stocks. It's good to always do your own research as well. So let's say you look at Lulu. What you need to do is to go to a new tab and then type in Lulu Morningstar. If you want to know how to look at all this for refresher, again, go to our YouTube channel. Look for fundamental investing. You will be able to see some of the videos, and I share with you over there how to look for it. So very quickly, I'll just go through and let's take a look at some of the numbers over here for Lululemon. Right, so remember the first thing we want to look is over here, earnings per share. Is this company earnings per share more and more year after year? Are they making more and more profit year after year? You can see on the left is 2012, on the right is 2021. So left to right, is this number growing? You realize, yes, right. So when the number is growing, means that this company is making more and more profit year after year, right? So another thing we want to make sure is operating cash flow. Is it positive? You can see, yes, everything is positive, which means that they are able to collect their cash, right? So nothing wrong with the cash flow. Everything is healthy. And what about the ROE? ROE, is it above 15%? You can see that this is 26. So that's amazing as well, 26%. And last but not least, under financial health, okay, we are looking at less than 0.5. Okay, less than 0.5. So this is 0.25. Once again, this is great. So out of the 4 criteria, how many points does this company get? Can you just type in? Out of 4 points, every criteria is 1 point. How many points does Lululemon get? Okay, yeah, you guys can see, right? Yeah, that is actually a 4 point, right? So for those of you who have been following us, you know that we don't just simply look at the fundamental itself. After we look at the fundamental, what do we look at? What's the step number 2? What is step number 2? Yes, exactly. We look at the technical analysis. All right. So over here, we are not so particular about valuation. But pretty much we look at the trend. So if the trend is right, okay, we like to actually ride the trend. Okay, so that's basically how I look for stocks. So another place that I wanted to introduce to you is basically a Motley Fool. All right, can everybody just type in MF? MF. MF stands for Motley Fool. Right, so this I would say I love the articles. It is easy to read. As you can see, this, for example, this article, a stock market crash is coming, 3 stock I aim to buy when it happens. So you can see this is just a short article. Probably you will spend less than 5 to 10 minutes to finish the whole article. And there's 3 companies over here. Number 1 is CrowdStrike Holdings. Number 2 is Cresco. Okay, this company is dealing with cannabis. And last but not least, C Limited. Wow, our Singapore company. Okay, very, very good. One of the company that they will buy when the stock market crash. So of course, they have many other articles which you can actually take a look. So I do get some ideas from here as well. So again, I just like to read. Okay, so for example, they mentioned about CrowdStrike. So they will tell you what are some of the reasons why they believe that this is a good company. Some of the gross margin that they are looking at. So just read, just absorb as much as you can. All right. What are some other places that I actually get my ideas from? Okay, maybe before I share more, can you all share with me, where do you get your stock ideas? Can you all just type into the chat group, where do you get your stock ideas? TI Prank. Okay, what's that? Is that a website or is that a Jita? Okay, jita.com. Okay, Alpha. Interesting. Any more? UI Cafe Black Box. Oh yes, I love that as well. Okay, UI. So some say from UI. Okay, investing.com, TIP rank. Right. So you realize that there's actually many different places. Like as long as you actually go and Google, there are so many places that you can actually get information. All right. So in fact, for Motley Fool, I just wanted to share with you one additional thing that I personally use. Okay, and that is when it comes to FinVis. Okay, when it comes to FinVis. So for example, today I want to find out about, let's say, this company called C Limited. So what you can do is actually type in the name, okay, and then go in. So instead of going to Google and finding all the news about this particular company, right, you realize what you need to do is just scroll all the way to the bottom. Okay, can you see? These are all the news that is related to C Limited. So they actually compile from, let's say, Motley Fool. Motley Fool talk about C Limited. Investor Business talk about C Limited. Zax talk about C Limited. What else? Global News Wire. Okay. Simple Wall Street, Business Wire, Bloomberg. So immediately, just by looking at this, you can get pretty much all the information that you need with that is related to this particular company. Okay. If you think it's powerful, can you just type in powerful? All right, so I love to use this, and I realized that it saved me quite a fair bit of time, especially when it comes to earnings. Okay, for example, Seeking Alpha. Well, nowadays a lot of website they don't allow you to keep watching their articles. You know, right after you have 3 articles, they say that you have to pay for our premium subscription. All right, so nowadays I don't go for Seeking Alpha because I'm not their premium members lah. So what I do is I come to FinVis and I search over here. Most of the articles are here are free, which means that you can actually go in and take a look at the full articles, right? So this is really useful. And I think just now somebody mentioned about black box. Okay, yeah, black box is also something that is very powerful. I'm not sure if I can show it to you, how powerful. Oh, okay, I think I can. Right, so for those of you who are a little bit lost, like what is black box? Black box is basically, this is an AI that our team actually created. Okay, you can actually see that the black box will tell you what to buy lah. Yeah, so these are all the trades. You can see every couple of days, it will actually churn out stock ideas. Every 3 to 4 days, it will come out stock ideas, and each time it will come out about 3 to 4 stock ideas lah. You know, so this is also the secret to where I get all my opportunities from. Okay, yeah, so this is the black box. This is only for our students, right? But other than that, I think for the public, FinVis is something that I love to use for the screener. All right, and actually, I don't know why, but recently I've been using a lot of FinVis. And another one last place I wanted to share with you is actually under Maps. Right, so this is last Friday. You can see everything is so bullish. Everything is green in color except for Disney. Right, so this is what I love to do. I love to go to the left-hand side and I search for growth, EPS growth for the past 5 years. So for those of you who love to invest in growth company, right? So just over here, you can actually see, let's say under the consumer cyclical, wow, you can see Amazon is growing at 100% on a year-to-year basis, right? And then we have company like Etsy growing at 44%, right? So this is within this particular sector. So for example, if you love the banking sector, all right, banking sector. So what you can do is you can come over here and you can see that, oh, okay, JP Morgan is growing at 8%. Wells Fargo, negative 36%. And for the financial, Visa is growing at 10%. And what about PayPal? Okay, why is it that PayPal share has been going up so much? It's because they are actually a higher growth as compared to, you know, the matured company like Visa and MasterCard. All right, so this is actually all shown over here. Right, there are many different other industries, okay, that you can actually see. For example, in the oil, in the energy sector, yeah, pretty much not doing well lah. That's for the oil as well as the energy, right? But it does gives you a good overall view, okay, for those of you who love to look for growth company, right? So once again, I hope this is useful for you guys, and this is also where I get my stock ideas from. Okay, so coming back to my presentation earlier on, let me bring everybody back to my presentation earlier on. Let me see, where is it? Okay. Okay, let me just stop it. Okay, yeah, I believe I stopped here earlier on. All right, so that is basically the short sharing that I have. But next, I wanted to share with you what are some of the opportunities that I see for next week. Okay, so let me ask you a very simple question first before I continue. Okay, between pain and pleasure, Which one do you think it is more urgent? Can you all just type in pain or pleasure? So today when you are feeling pain, is it urgent? Or if let's say you want to become rich, you want to buy a nice car, you want to go for a restaurant, which one is more urgent? We just wait for more people to type in first before I go on. We have about 99 of you. Okay, just wait for more response. Okay, so far, that's great. Everybody is typing pain. Pain, 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 pain. Yeah, everybody say pain is definitely more urgent, right? So when you feel pain, what do you need to do? You're going to see the doctor. When you feel pain, you got to do something, right? So why is this important? Okay, because, this is basically the government. Right, so we know that last year, okay, what happened? What is the thing that causes pain to the government? We have this thing called COVID-19. So is COVID-19 a pain or is COVID-19 a pleasure? One or two? One for pain, two for pleasure. What is COVID-19? Is it one or two? One for pain, two for pleasure? It is definitely a pain, right? So when COVID-19 strike, the government is so painful. Everybody is feeling the pinch, feeling the damage. And, what happened is that the government has to react. Okay, the government has to react. So how does the government react? The government reacted by printing a lot of money, right? To make sure that, business still goes on, business that are affected goes on, people who are unemployed, they get money, so this is the way of reacting to the pain. All right, and you can see that it's pretty effective. All right, and that is where, everybody is laughing, everybody's happy, right, so far. Right, so recently, there's actually this particular news. Colonial pipeline resume operation after hack, but many gas stations still face shortages. So what happened is that there's this company, okay, dealing with gas pipeline. So their system actually got hacked. So because of that, there was actually it causes quite a fair bit of a shortage, and this is actually quite a huge problem. So you can see almost 5,500 miles of pipeline has to be stopped, and it created a little bit of a panic buying. So is this pain or pleasure? Okay, pretty much we can say that this is definitely a pain. Okay, yeah. So when this happened, the government also like, wow, how come your one company get a virus attack? I mean, get a cyber security attack, by some hackers, and it causes quite a fair bit of an issue within the country. So immediately what happened? This is just a couple of days later, right? Okay, Biden actually signed order to boost cyber security after the pipeline hack. So they tell all the private company and they realize that in fact a lot of the government system, right, okay, is actually run by private company. So they actually told all the private company and say, hey, you have to do something about your cyber security. Okay, make sure that no hacker can actually come in. And that's where they realize that, wow, this is something that they have to spend money on because they already feel the pain. So what if the hacker actually go and hack other areas? Immediately there will be a lot of things that's going to happen. Okay, on top of the COVID-19, which is already causing a lot of pain. Right, so definitely the government is going to spend more money, okay, into this particular area on cyber security. Even before this pain, okay, we can actually see that cyber security is already a huge market. Why? Because everybody is going digital. All right, everybody is going digital. So which means that there's more devices that needs to be protected. Okay, more hackers will actually try to take advantage of all your data and all the information. So all this needs to be protected. So in terms of the growth rate, we can see that this market is actually this is a double-digit industry. Okay, they are expecting about 12.6%. Some other research expected is about 14 to 15%, but pretty much it's between this range. So this is where, okay, I also wanted to share with you, okay, this ETF called HACK, H-A-C-K. Can everybody type in HACK, H-A-C-K? So when you go to this particular ETF, HACK ETF, okay, all you need to do is basically just look at the top 10 holdings, okay, and it will give you a good understanding on, wow, what are some of the companies that we can actually look at. So of course, there's Cisco, there's Proofpoint, there's Fortinet, there's Akamai, blah, 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 a lot, okay? But in short, if today you're not familiar with the industry, you do not know how to analyze individual company, you can actually invest in the whole ETF, which is this Prime Cybersecurity ETF. So for those of you who are not sure what is ETF is basically a basket of funds. Okay, so they have all these companies on the right-hand side, they put lump together, and then they sell it to you as a basket. So when you buying into this hack ETF, you are literally buying into almost 30 to 40. In fact, I think for this one there's about 59 companies. Okay, yeah, immediately owning 59 different cybersecurity related company. Okay, so this is hack, and let's take a look at the technical chart. Okay, like I said, for ETF, it's a little bit hard for you to determine whether it's undervalued or overvalued. So it's pretty much based on the market, analysis and market trend. So we know that the demand for hack is for cybersecurity is going to go up. And the good thing is recently, because of the tech sector, as well as the Nasdaq, all this company, they actually gotten quite a fair bit of a hit as well. So you can see that it has fallen about almost 20% from its peak. Right. So I'll say that together with this news, it does create some opportunity over here. So just by looking at the risk reward ratio, I would say this is not too bad. Okay, not too bad. Okay, it's actually at about 1.87 risk reward ratio. All right, so this is just again for some short-term analysis. Again, like I said, when it's painful, the government is going to react, and the money might not comes in immediately. Okay, but I would say that over the next quarter, the company is definitely going to ramp out on cybersecurity. So on the next quarter earnings for all these company, pretty much we should be able to see a jump in it. So that would again be translated into the share price. Okay, when all these company release a better earnings. Okay, so this is for hack. Another company that I wanted to share with you is this company called CrowdStrike. So CrowdStrike focus a lot more on endpoint. So for example, your handphone, your laptop, and they are actually one of the fastest growing cybersecurity company. So again, they might not be one of the largest, they might not be the most well-known in terms of big companies that is well established, but in terms of the fastest growth and pretty much the most well-run, I would say that CrowdStrike is definitely in the first top 3 position. So you can go and check out more on CrowdStrike. But once again, you can see that this company, in terms of the risk reward ratio, pretty decent. Okay, pretty decent. All right, I would say that the risk reward ratio over here is about 2.93. So if it does goes below the red line, that's where you need to get out of this particular stock. But if it does goes up, I do expect the price to hit somewhere in the range of $250. Right, so risk reward ratio at 2.93, pretty decent. Okay, pretty decent. But do make sure that you give yourself some time when it comes to investing in all this company. I would say that at least a 1 year time frame. At least a 1 year time frame. All right, so please don't go in 2 months, 2 weeks, and then say, hey, how come 2 weeks later the price still haven't go up? Okay, yeah, I would say that for what I'm going to share with you today, pretty much give it a 1 year time frame. So another company that I have mentioned earlier on, okay, is this company called Fastly. So Fastly is actually dealing with CDN. Okay, but pretty much what they do is they make your internet faster, more stable. All right, and what happened is that why I actually chose this company to share today, even though they might not be exactly related to cybersecurity, is because they recently actually acquired this company called Signal Science. And Signal Science is actually one of the fastest growing web application security company in the world. And actually, when I was reading the annual report, not annual report, I was listening to the earnings call. They did mention that actually the customers, they are getting their services, and on top of it, many of them also subscribe to these security services. So even without this sudden, I would say, emphasis on cybersecurity, they were already doing pretty well, right? So with this government pushing out more cybersecurity, getting more private companies to skill up to also ramp up their cybersecurity, I do see that Fastly is also able to take advantage of it, right? So together with their services, okay, I would say that they would also be able to take advantage of this push in the cybersecurity area. So that is the 3 companies that I wanted to share with you today. And of course, for Fastly, the good news is it has fallen almost 67% from the all-time high. Okay, 67%. Okay, but again, okay, I would say that previous 2 company, I would say it's okay to enter. For Fastly, right, even though the price has dropped quite significant, but the risk reward ratio still not exactly there. I mean, the price could continue to fall down further. But what I want you to do is to monitor this stock. Okay. When it's time to enter, I will let you all know to enter. But I would say that this stock is pretty, I wouldn't say undervalued, but I would say the price right now is pretty good. All right, so that's the three companies. Can you just type in the three companies that I've just shared with you today? Okay, three companies that I've just shared with you today. Refresher. What are the three companies? Not all is companies lah. Okay, one ETF and two company. Okay, Hack, CrowdStrike, which is CRWD, as well as FSLY, and that is Fastly. Okay, Fastly. So yeah, I hope it has been useful for you guys. Okay, once again, okay, please make sure that you do your own due diligence lah. But like I said, the government is very reactive lah. Okay, the government job is, whatever pain they feel right now, they are going to react immediately. Okay, but the thing doesn't appear immediately. Just like, for example, last year March, when the government started to print money, the impact wasn't immediately shown, but as they print more money, what happened? The share price starts to go up. So again, when the company starts to ramp up their cybersecurity, and that's where you can see that the earnings from all these companies starts to go up. That's where the share price will start to run. So it might take some time. So make sure that you give yourself a little bit of a timeline, a slightly mid-term, about 1 year, okay, for all these company. All right, so that is what I have for you guys in terms of today's sharing. So for the last portion, okay, I have a quick announcement that I just wanted to share with you. So next Tuesday, I'm going to share a short webinar on how to turn your losses into profits using the BOAT formula. All right, so I understand that because of the Nasdaq drop, the tech sector drop, some of you might be facing a little bit of losses. Right, so again, like I said, losses are painful. Okay, losses are painful. But again, you have to react to it. But again, right, please do not overreact to these painful losses. Why? Because you realize that when you have these losses and you react fast, how do you react? Normally, you react by buying more. You said that, wow, drop, never mind, I buy more. Hopefully that when the thing recover, I can make back my losses. But that can be very, very dangerous, because what happens if the price continue to go down further? Right, for some of you, you probably have already bought more along the way, and as you bought, the price continued to fall, and now you feel a little bit fearful, okay, because you got no more capital. So I'm going to share with you, for those of you who are losing money, even if you are profitable, okay, you can also still listen, okay, but so in short, this is free, but you can see that this webinar only allow me to have 100 participants. So if you want, okay, you can register it over here using this particular link, bit.ly/UIMW04, or you can use your handphone to scan the QR code and you will be able to register as well, right? So that's all from me. So if you have any questions, you can actually stay on for Q&A. If not, basically, that's all from me.